Good afternoon, everybody. Welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Wishing that I had more of a compelling story to tell today on this Monday, the 10th of April, but I do not. Now, there's plenty of headlines. You're going to hear about the continued conflict in Syria. You're going to hear about Libya and disruptions in oil production. And finally, you're going to hear about here in the United States, where we are in the midst of an earnings season and getting ready for the major financial institutions to report on what is a holiday-shortened week. But what you're seeing behind me is a flat market. Dow Jones finished up $1.90 at 20,658. It stayed in a very tight range. The only time that we had any tests to the downside was when we had those troop movement reports and headlines coming out saying that there are about 150,000 troops that were being estimated moving towards the Korean border. With that, the market acted slightly negatively, but bounced back and was back in the green, finishing the day flat. You see the S&P 500 up a buck range. Challenging though, it's 20-day moving average. So you see that the short-term bulls, they are trying to garner some sort of control, but it's difficult in this environment, especially since we see that trading volumes are very low. That was somewhat expected coming into the holiday week because we have a shortened week with Good Friday. On Friday, the exchanges will be closed. But with that being said, there is quite a bit of headline risk at this juncture. And now we're getting into earnings season. So NASDAQ finished the day up $3.03 at 54.06. What's interesting about the NASDAQ is that the semiconductors continue to trade weak. Taking a look at the SMH, which is the index that trades, the ETF that follows semis, it was down 70 cents. You see it up after hours, but it's down 70 cents at 78.42, and you saw it finish the day below its 20-day moving average. That was something where I see that the short-term bulls right now in semiconductors are on their heels. They're going to have to fight back, and this is one of those offensive sectors that the NASDAQ wants to be moving to the upside and leading if, in fact, they're going to continue to move to the upside. Russell 2000, we saw that finally they are now challenging that 20 and 50-day level, 1367. Remember, we're talking about it. 1368 is that critical level. We're right there at 1367. So the small caps are on the precipice, the bulls, trying to get through and bust through there. Now, we could see that both the economic data that's going to be coming out for the remainder of this week, as well as the earnings that will come out from the big banks towards the end of this week, that could spur some interest in small caps, because not only will you see that there's promise on the forefront for these larger cap names, but that could mean that economically, especially from the data that we're going to be waiting out on PPI, CPI, and so forth, that could show some real growth factor going into the spring and summer season. That could get small caps moving to the upside. We did see, though, that volatility caught a bid. That's one thing that did not come off even after the market bounced back after all of the headlines that were coming out. Volatility is trading at 1401, up a buck 20 or 9.17%. As I have noted over the last couple of weeks, seeing these levels of volatility now resurrect themselves, I haven't seen that since when I pulled off some VIX exposure that we had on in my client portfolios when it got as high as 15. That's where resistance is at. Seeing a settle above 14, as a matter of fact, seeing a settlement above 13 for the first time in probably 3.5 months, almost 4 months. Basically, since the end of December, we haven't seen a vol close above 14 since December 30th, since almost the beginning of this year. End of last year. So this is very interesting, and obviously with the headlines and also all the data risk that we have out there. Plus, don't forget, we have European elections in France specifically that are getting very, very volatile. Speaking of volatility, we're also seeing that the the dollar actually traded a little bit weaker, finishing the day on its lows. I think that it has some pretty decent resistance at this 101 level. It did get above its 20 and 50-day moving average, but dollar bulls are going to have some work. And right here, oil. Now, remember, crude oil is going to be a volatile trade. We're going to have the EIA and API come out with storage numbers here for the West Texas contract in the United States. You're going to see that the Brent contract in the Middle East is going to be trading very volatilely, especially since we still have those production disruptions in Libya. We're going to watch that action very closely. Any disruptions in the Middle East is going to start running up crude both on the Brent side, and watch the inventory numbers over Tuesday and Wednesday because we have a holiday shortened week. Let's watch those inventory numbers, see if they start moving the West Texas contract. Anything above 53.50 is going to start to catalyze a potential challenge of the 55 to then potentially $57 level for the crude bulls. They've done an amazing job right now of retaking what was pulled back over the last couple of weeks. What's notable here, again, is watch that inventory data. It has been coming in bearish over the last couple of weeks, but the crude contract has been holding up, especially with these headline risks that we continue to see, and decent data as far as both domestic and global economic data. Finally, taking a look at the fixed income complex, the bonds have been moving to the upside all day today. We haven't seen any red in either the 2-year, the 10-year, or the 30-year. What's very notable is that these yield curves are starting to get flat across the complex. You're not seeing a big differential between the shorter end of the curve and the long end of the curve, and bond prices are firming up. That means yields are coming down. This will be very interesting to see how the financials are going to continue to react this week. They've stayed in the game, right? They've stayed strong, but with these banks set to report on Thursday, specifically JP Morgan and Wells Fargo, they're going to be reporting before the open on Thursday. We talked about this in Tech Talk. The financials have been trading mixed to a little bit down, but still staying in that consolidative range that we've seen like in the S&Ps and the Dow Jones. This could be a launching point either for the bulls or the bears, but right now the bears have taken somewhat control over the last couple of weeks, but the bulls are holding in there. They're keeping it choppy and tight as far as the range here. So we'll see if that continues into the earnings of these banks. All right, folks, that is it for the closing bell right now. Go back and check out everything that we've talked about today in Tech Talk Strategy Now. We also looked at the U.S., Europe, and Asia. We cover all of it every day, 5 times a day here at MarketStream.live. So join us. Take care and have a great evening.